So what really is a lease, right? So I'm going to use a few examples for this because I love using examples to tie these concepts, usually lofty, high-end business concepts, to our everyday lives. What is a lease? Well, I could be referring to you leasing a car, right? Or I could be referring to you leasing an apartment. We're going to tie those concepts in as much as possible when we delve into these business leasing examples because you can relate to those a lot more. By definition, a lease is a contractual agreement giving the lessee rights to use property owned by the lessor for a specified time. Examples of leased properties, again, we are thinking of businesses. We are thinking of business leasing in this example, in this whole section. However, like I said, I will tie it to your life. Buildings, transportation, right? We are going to rent maybe space in a railway, rent a truck, construction equipment, land. Maybe we can rent an aircraft. Now, what's the advantage of leasing? Well, you don't need to put all the money up front, right? And that's going to be huge. Just that sentence right there, we're going to see so many similarities between leases and bonds. We're going to see present value factors again. And why? Why do we see that? Well, because with both bonds and leases, I could go out and I could buy, let's say, an $800,000 truck. That's a very expensive truck. I don't know, an $800,000 machine. Now, I could do that in cash, but I don't want to. Now, even if I have that in cash, maybe I don't want to because I can put that money to better use. So I can either issue an $800,000 bond to essentially borrow the money, or I can lease this $800,000 piece of equipment, right? So leases really are tied into bonds because it's your other option, right? It's like, what other option do you have to do when you want something, but you either don't have the money or don't want to put the money up for it? You lease it. All right. So you don't need to put the money up, right? We've got profitable margins on interest payments. There's high residual value here. There's tax benefits, many reasons to actually lease. But I wanted to really tie in the connection with bonds here. We're going to see lots of examples tying in with bonds. Now, this whole section, I'm going to break it up into two parts. We've got our classification, our types of leases, and here I'm going to say finance and operating leases. And then we've got our math, and we've got our present value factors and all that. This part is not too bad. It's classifying, understanding criteria, and memorizing. It's really not bad, the beginning part. The second part is what people consider bad, and that's fine. I'll walk you through it, make sure you understand it. Leases are categorized as finance or operating leases. In both cases, companies capitalize all leased assets and liabilities. All right, so finance and operating lease, we have criteria for each of these. And I'll read through these slides, but I would rather jump to the criteria first.